Going to go over through our Newsbeat strategic evolution number 5, and I'm going to share the 8x8 C strategy with you. I'm going to explain what it is, show you the slide. But first, by watching this video, it will go completely black. But listen, don't get scared. I promise you there's a light at the end of the tunnel. But right now, turn off the lights. Everything goes black. You could still hear me. I'm still here. When you see the light at the end of the tunnel, it will look small at first, and then it will get bigger. What is that I see in the distance? It is the 8x8 strategy, and it got bigger. It's right in front of my face. This is the 8x8 strategy, ladies and gentlemen, right over here. It is, again, I worked very, very hard. I worked very hard to make as few steps as possible. And I basically, this is what worked. Is it going to work in 2020? I don't know. It's been working recently. It worked in 2018, 2019. I have no idea if it worked in 2018. I didn't go back that far. But for me, knowing who I am as a trader, I have come up with 72.2% effective. So I'm not going to go into full details about that, but I could sort of explain it along the way of how I counted a winning and losing trade. And I think what you guys are going to realize is when I try to actually say, what does 72.2, what does a word effective mean? I think you guys can agree by now that when I go over a lot of my results, I'm very harsh on what a winning trade looks like. I'm very harsh. I say, okay, that, maybe I'm very strict. So that's sort of so when I say 72.2%, I'm hoping that you could bat over 80 with it, just so you know. Like the one and done, I think was an 88% strategy. Some people I know bat 75%, some people are batting 95%. It's just the way it goes, okay? Let's go back to the strategy here. Choose any name. Now, when I mean any name here, like I'm really not I wasn't looking at, you know, $10 million companies. All right. When I said any name here, as a generalization, I was looking at companies worth over $2 billion. Um, I am I am sure it works on like smaller names per se, but if a company is going like bankrupt, for example, and it's sort of just like uh, you know, pops up for the first time, a lot of it requires like a much longer term swing. And I think you'll notice how effective this strategy is. So the first thing, so just to clarify, when I say any name, I was referring to names with $2 billion of market cap or more. There might have been one or two that dropped under 2 billion, but we're dealing with billion-dollar plus companies. Most of them were 20, 30, 40, 50 billion, 10 billion, 8 billion. You get the picture. They're the largest companies on the planet, okay? So you choose any name that's been trading below the exponential 8 moving average on a daily for a minimum of 8 days. Can be more. Make sure the 8 EMA has been below the 21 EMA the entire time. That applies to the first step. So if the stock has been trading below the 8 EMA on the daily for a minimum of 8 days, hence the 8 by 8, you have to make sure that as it was doing that, the 8 EMA has been below the 21 EMA. This is a long strategy. You have to make sure it's been below the 21 EMA the entire time, the 8 below the 21. The first day where the stock closes on a green bar and the color is based on open versus close, go along with calls with at least 4 weeks of time value. Okay. Now, just to give you guys, without looking at your charts, I'm giving you all the opportunity right now, everyone in the room, to choose one name. Go for it. One name, but multi-billion dollar company, please. You know what? Any name. Go small cap if you want, but one name. You all get one name. And if you overlap, you overlap. I don't care. If 10 of you say Apple, I'll just do Apple. That's fine. Not sure what Vastly is. What on earth is that? Oh, gotcha. Fastly. Now I understand. Beautiful. All right. So, that's all right, my brother. All right. We'll cut it off in 10 seconds. And maybe my results will, maybe what I show you will fail on every single one of the names you're showing me. I doubt it. But I want to show you how it looks like. Where's Apple? Shelby art. 7:54 p.m. Shelby. Outlook. All right. I mean, I want to do large cap names, but I said you were allowed to use small cap names. And Outlook is a $23 million company, so let's take a look at it. Hmm? How are you confused? Do you see Shelby Cook in chat? Am I the only one who sees Shelby? Is he like a ghost from my past who's reaching out to me and being like, Apple, Apple? No? All right. You guys don't see Shelby in chat. I do. If you scroll up, Shelby Cook. All right. Either way, no more, no more, no more, no more. You guys are crazy. All right. Let's remove that, whatever that is. Let's remove it. Let's show my webcam. All right, let's start off with Apple. All right. So let's find a day where the 8 was under the 21 in Apple, and we held beneath in the 21 for 8 days. One, two, nope, not there. Oh, right here. This is the last time it happened in Apple. All right. So the 8 is below the 21 right over here for the first time, right over here on Apple on May 3rd. Oh, let me move my head. You know what? I'm just gonna move my head over here. There you go. The 8 is below. Didn't see the first 3 feet. It's true, Art. It's so true. You confirmed it. All right. So you can see right here, the 8's below. The yellow is below the blue. That's Oh my God. Let me move my head over here. Right over here, you see the yellow line is below the blue line right here. One, two, three, four, without breaking up and closing above the exponential 8 with the green bar, right? One, two, three, four, five, six, seven, 8. It could be 8 or more, just to point out. I said minimum of 8 days, can be more, right? Closes above the exponential 8 right over here. You consider going long at the close here a good overnight in Apple? Yeah. Yeah, that's real nice. That is really nice. I'm sure I'm going to call out ones that lose, but I didn't want to cherry pick names, so I just said I went through a lot more names that you guys are obviously going to call out, but I figured I'd let you guys point it out. Lady said, wait a second, Mr. Melnick. Wait. did, did I did I say? Oh, whoops. You're absolutely right. The first day where the stock closes on a green bar. Yes, I did mean above the exponential 8. That's my fault. I didn't type that out. Thank you. I screwed up. It was me. Thank you for correcting. To the first day you close above the exponent, not with the first green bar, otherwise you would probably go long here and it would have been whatever. Anyway, you would have gone long right there. Next in the chat, did I skip Microsoft? I did. I think I skipped Ken. See, I also missed the first 3 feet of the aisle. All right. Let's see what's going on here. 8 below the 21 in Microsoft happened right here for 1, 2. Nope, got above. Doesn't count. 8 below the 21 in Microsoft. 1, 2, 3, 4, 5, 6. Yeah, even though it worked, it didn't count. Um, I'm just trying to find the last time it actually happened in Microsoft. Let's see over here. Um, 8 is below the 21 right here. 1, 2, 3, 4, 5, 6, 7, 8. Stock closed at 101.18 on a green bar. That's above 101.12. So you would be going long right over here on Microsoft. So look what happens. Gaps up, you're up money, stock hits 102.41. You're up money, you're up money. You're back to about break even or down a little with the option expiration value. You're down money. You're up money, you're up money, you're up money, you're up money, and you're up money pretty much every day afterwards. See that? So it's good to note these things. And remember, I'm talking a month out when you buy these things. I just want to. Now, you sh- I want to point out that you could probably do another strategy. Like maybe you could do call spreads. Maybe you could short puts. That's on you. That could be a better strategy than buying calls. But the strategy I just showed you was going long right over here. Right? Do I consider that working on a swing? Yes. Yes, I do. Fastly. All right. Let's see. Below the 21 here, didn't last 8 days. Was below right over here. Right over here. 1, 2, 3. Nope. Got above. Back below the 8. 1, 3, 4, 5, 6, 7, 8, 9, 10. And then you would have gone long right here on the last one. It's kind of hard to say. I know you were up money, down money, and then maybe down a little, break even-ish. But let's look at the time before. You especially want to see the 8 cross below the 21 when you do it, by the way. So like right over here, you could see, oh, let me move my mug. Right over here, you could see the 8 crossing below the 21 for the first time. 1, 2, 3, 4, 5, 6, 7, 8. Then you would buy over here, closed at 25.11. The next day it got to 27.07. So when you like jump up like not 8, 9% in a day, you have to consider that successful, in my opinion. And if you held it for a long-term swing, you lost money on this one. Do I consider that successful buying right here? It's hard to say right here, in all honesty, because it was a 4% move the next day, and you're dealing with a stock that I probably wouldn't go for, even though, let's see, how much is Fastly worth? Just for argument, it's worth 1.9 billion. Okay, but I did want to show you what that looks like. To some people, you might consider that a success. For me, it's a success because I lock in money. And if I held a little runner, I would have probably lost my runner. That's how I view these trades, personally. But on some of them, like Microsoft, if you went a couple months out and you held, the stock rose 40%. It's kind of insane. Disney. All right, so you're looking for times where the 8 crosses below the 21. So it happened right over here on March. Let's see, did it happen any other time? Yeah. So I just want to look the last time it happens. I don't want to cherry pick any of this. Okay, so the 8 crossed under right over here, got above it, got below it, crossed under again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. All right. So right over here would have been your swing point in Disney. As soon as you bought it, you would have been down money the next day. and you would have had to wait 1, 2, 3, 4, 5, 6, 7, 8 days before you're like, okay, I'm up nicely. Because you're buying at 130.90 and it went to 133.44 on this day. And then if you held it for another few weeks, you obviously hit a home run. But remember that I'm talking about a month out. So if you're buying in October 7th, you have to say, where were you on November 7th? And the highest point you've gotten between there, November 7th, was 134.14. Was it great? No. Could have it worked? Yes. Could have it failed? Honestly, the way I see this thing is I would like to make about 75 to 100% of my money before I consider the trade successful. But I do want to show you what Disney looked like over there. So out of curiosity, how do you guys consider, and maybe you have to go long calls 2 months out. Like maybe 1 month wasn't enough. 1 month would have been enough to make money here on October 17th. And yeah, you do have to watch these positions. And you would have been down money in the trade in your options for 7 days before being up nicely on the eighth day. But we are talking a month out. So out of curiosity on the Disney, and I want your opinions on this because I'm going to help you answer a question. Buying Disney options right over here on October 7th, do you consider this trade for you working or failing? And you could use any parameters you want. You could use what happened in the future when it already went up to 153. You could use the short term where you were down in 3 days, 4 days, you took a loss. You could have used that you were up money. Type in Type in 55 if you consider the trade successful, 77 if you consider the trade a failure. Yes, we all know the trade could have worked. We all know it could have failed. I'm curious. Okay. The point I'm making is if you answered 77, you have to think very hard about catering this strategy. Catering this strategy. Well, money management is you're risking 100%. Yes, I am looking to make 75 to 100%. A lot of times you won't lose 100%. Sometimes your calls will be down 80%. You'll say expletive word and you'll dump it. I'm not saying you're going to lose 100% every time, but I'm saying that yes, that is what you're risking. So if you throw $500 at it, $1,000, $100, $200, $2,000, 3,000, 5,000, whatever your number is what your number is. But yes, you're risking that money. So if you answered 77 on this one, keep that in the back of your head as I go through these examples, because you might have to change it or maybe not even do it at all. To me, I look at a trade like this as I probably would have been down money in the trade for around a week or so, and when I was up money immediately on October 17th, I would have chucked it because I would have been in a situation where I'm looking a gift horse in the mouth, and I know how I am, and I would have either lost 30%. Like, here's the point on Disney. You buy a month out. What are you really going to be down after a day like this where you buy at 130.90 and it goes down to one as at the low here 128.37, the next day 128.06. So figure you're down $1.84 in your monthly calls. What are you losing? 30%, 40%? My point is you didn't lose 100% of your money. So in the worst case scenario, you were losing that 30, 40%. And every day afterwards, you were lifting up, higher than that. So yes, it is 100% lose strategy, 100% try to win strategy, 75% try to win strategy in terms of dollars invested. Home Depot. We're looking, first of all, for the 8 to cross underneath the 21. All right, it happened right over here. Gap down. 1, 2, 3, 4, 5, 6, 7, 8. You're good. Still didn't close above the exponential 8 on the green bar. 9, 10, 11, 12, blah, 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 blah. Happens right over here. 100% without a doubt, this is a working strategy. Look at that. You're buying right there on December 16th. Kaboomy. Look at that. Gorgeous. No question. No opinion. There was never a point where you would have been down money for over a week and you would have been up well over 100% on your options. Anyway, sometimes to me it's 75%. All right, Roku. All right, cute. So the 8 right over here is the first day where the 8 was below the 21 after being above it. 1, 2, 3, 4, 5, 6, 7, 8. Yep. So right over here, you would have gone long here at 140.14. The next day you would have gone to 146.72. The next day you would have gone to 149.49. So you would have been up at best like 9.5 points. And if you held it all the way till now, you would have been down money. But if you're up 9.5 points on Roku, yes. And believe me, like don't get me wrong, I love Roku a lot more than what Disney did. I love being up money right away, as does everyone. Don't get me wrong. But Disney was an excellent example that I wanted to go over. So obviously it worked in Roku. Look, I could probably fix this slide better. Make sure the 8 is below. Make sure you start counting the days after the 8 EMA crosses under the 21 EMA for the first time. That's what I'm looking for. So I'm literally taking you through this entire process. I did all the work. I've been doing this work for over a month. What you see here is a month of work, by the way. I've been doing it in more than a month, I guess, because it's January. So I started like in the beginning of December. Anyway, let's go through the names. Twitter. All right. So we're looking for the first point where the 8 crossed below the 21. So you see the 8 above the 21. All right, over here, crossed below. Didn't close above the closed above the ADMA here. Grinded sideways. You're down money. You're down money. You're down money pretty much every step of the way. And this is earnings. Like I don't have any thoughts on holding these names into earnings. Much like I wouldn't tell you that you could have held Disney into earnings here and crush it. I didn't say that. At the same point, I'm not going to say that you're holding into the earnings report where it gaps down. Twitter would have been a modest losing trade. And I mean modest is because you would have had the time value into earnings, so you wouldn't have lost that much money because the chance of it shooting up would have been big. So I don't think you would have lost a lot of money because the implied volatility in those options would have remained strong if you sold them prior to earnings. So Twitter would have failed. Look at that. Buy right here at, let's call it the closing price, 40.36. It would have gone down to 38.27. You would have been down 2 points 5 days later. It would have gone up to $40.48 here, which you probably would have been down a little bit of money with time value. And then right before earnings, I'm not insinuating you're holding it for this gap down or even if it gapped up. That's a whole different thing. So that one wouldn't have worked, Ricky. Judy, Facebook. Okay. When was the last time the 8 crossed below the 21 in Facebook? That's what I'm looking for when I'm choosing this. So if you're like, why is Mark choosing that? Looking for the first time, not the first time, the last time they crossed below the 21. And that's right over here on the daily. You can see the 8 EMAs at 186.56, the 21 EMAs at 186.76. Goes down for 1, 2, 3, 4, 5, 6, 7, 8. 8 days is okay. So 1, 2, 3, 4, 5, 6, 7. Then on the 8th day you did it. So you would go long here. Your P&L would pretty much do almost nothing for 5 days. And on the sixth day of Facebook, my P&L went green for me. Then if you held it a little longer, went up. I consider this successful. Look at that. You bought at 179.38. It went as low as 177.72. And by this day, it went to 186.49 at the high. I'm taking like the lowest point of where you were And I'm also comparing it to the highest. So I'm not cherry picking the ranges. I'm showing you the worst and the best. And yeah, if you held it a little longer, I mean, it went to 190. I get that over there. It went up higher. But yes, I do consider Facebook working. And if you're looking at this and you don't consider this working, keep in mind that you bought at 179.38 here. If you sold it the next day, it went to 180.98. And again, I am taking the high points of everything. So, and the low points of everything, all right? So, yeah, I can, and then you would have been down money 2 days later. So, yes, this is a lot of times more than an overnight. In this case, you could have sold it the next day. If you held, and remember, you're buying them a month out. So when you bought here, you're buying the November calls at least a month out. Remember, I use the word at least 4 weeks of time value. So Facebook, to me, I consider that successful. And mark down the ones you don't consider successful in your eyes. Because for some people, you look at Facebook and be like, "Yeah, you went up a dollar and a half, and then it went down. No, it's not for me." But you had to hold it for 6 days before 6 trading days. Be a week later, you literally bought your calls on Thursday, and you could have sold them the next Friday for a really nice gain. I mean, you're buying at 179.38, and it went up to 186.49. So it went up $7. That's enough to make money on monthly calls in Facebook. And if you're uncomfortable with this, I would suggest, and you want to try it, I would suggest take $100 worth of calls. Take $50 worth of calls. Take something that you're comfortable losing everything in. You get to choose the number. Don't fall for the Wall Street scam that, oh, options are too risky. You could lose 100%. Options are not risky at all compared to stocks because you can choose what 100% is. When you're in a stock, 100%, unless you're buying some small cap biotech, REOTLK, re Execure, reads like a speculative name, you don't want to lose 100% on a stock. But you can choose what 100% equals as you do this strategy. Let's move on. Boeing, Diana, good one. Let's take a look and see when the last time this thing. All right. So the last time this crossed underneath the exponential 8 was right here, and it plummeted down, and it gapped up here and put in a green bar and closed at 337.55. Now here's the funny thing about this one. It opened up at 339.66 the next day. I actually took this trade, as you guys recall. A lot of us were in this trade where we took Boeing overnight. It opened up. I sold right in the morning, as I do a lot of my overnights, for better or for worse, and it worked. And I made money on it. However, for the sakes of what I'm showing you here, I'm considering Boeing a failure so far. However, it's not fair to call it a failure, even though it went down, because you are a month out and you're up a little bit of money, maybe not enough to where you'd want to swing it. So I'm respecting both ends. But for the record, I'm marking this one down as failing. I just want to keep it real. But let's look at the last time. I think that's fair because, I mean, we only have 5 days of data on the supposed monthlies you took. So far, not working. And I am marking it as failing. Let's look at the last time it happened, just to be fair. All right, 8 closed below the 8 crossed under the 21 right here for the first time on October 15th. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So you would buy it right here. Monthly calls right here. Perfect example. Stock closes at 348.93. Goes as low as, wow, 348.93. Goes as low as 339.45. So that's a $9.48. Let's call it a $9.48. 9.5 points against you in 2 days. but you're in calls. It's not like if it keeps dropping, you're going to lose an unlimited amount of money, just so we're clear. The next day, you come back a little, you're down money. The next day, you hit 350, 145, you're up money. Hold for 4 days and be up a few points with a month call. The next, if you still held it, you made money. To me, this is a successful trade. Now, I'm going to ask you again. On Boeing, type 55 if you consider buying right here successful. Type 77 if you consider it a failure. This is a very important idea because remember, you're in calls. So I don't want you to be like, oh my God, we're down. And I'm talking the worst case scenario, just to be fair. Every time you're down $9.48. Not going to sugar. I won't even call it 9.5. You're down $9.48 at the worst bottom tick possible buying right here. But right over here on October 29th, you bought calls that went all the way over here to November 29th. At best, it went to 375.60. At best, this stock was about $26.57 in your favor. 26.57 in your favor. At best, $9.48 against you at worst. However, you were up money after 5 trading days. Exactly. So that's good. Some people are going to look at that and they're going to go nuts seeing that their position is down that much. That's the whole point of buying a set dollar of option calls. So I just want to show you to make it fair. And it did have a lot of negative news. I'm with you. And you could avoid certain names that you feel uncomfortable with as well. Lee Raytheon. Last time ape was below the 21. Was right over here, but it only lasted a few days, so it doesn't count. Happened again right over here, but it was only a few days, so it doesn't count. So we're looking for the last time the 8 was basically below up to the 8th day to make it fair. Right over here was the time before that. 1, 2, 3, 4, 6. Wait. 1, 2, 3, 4, 5, 6, 7, 8. Okay. So you would be buying the last time you could have done this on Raytheon. Following what I'm saying is buying it right here. There is absolutely zero question that this was effective. Zero. Look at that. Went down a little and then even shot up higher. So that would have worked. Facebook, we went over, Steve. Judy Stone. When was the last time the 8 was below the 21 on Stone? Right over here, only lasted a few days, doesn't count. Right over here, only lasted a few days, doesn't count. Over here. So again, I'm not cherry picking anything. As you can see, I'm going through your names. Right over here is the first day. I guess this was an earnings day, August 15th, or a news day, whatever. 8's below the... Still 6. I'm sorry. 1, 2, 3, 4, 5, 6, 7, 8. Yeah, blah, 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 blah. Right here. Buying right over here. Closes at 32.28. Goes to 34.52, followed by 34.94. That to me is a winner. Then it goes against you, and then it explodes up to 39.45. Remember, you're buying it at 32.28. I consider this a successful trade. And please note, if I am writing anything down that you disagree with, I respect that. What is considered successful to some may not be considered successful to others. There's a special controversy when it comes to swinging names. ACB. Oh, Brian. What are you doing, Brian? All right, this thing has been below the 21 since my great grandfather. Let's see. The last time, hold on. All right. So let's be clear. The 8 crossed below the 21 right over here. So the first time you put in a green bar above the 8 here would be the first time you can buy it, which is right over here. And it just basically, this is the point where it moves sideways forever before dropping. So I would consider ACB a failure, straight up failure. On a side note, I would never, ever, 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 ever go for this name, just so we're clear. I'll lose money on the Boeing. I would not lose money on ACB. Now, the funny thing is ACB is a $2.4 billion company. I still wouldn't do it, personally. I might do a CGC, which I don't know what the chart's going to look like here, but I'd rather talk about a CGC. So let's see what it did when it crossed underneath the 21. When the 8 crossed underneath the 21, the last time it happened. Last time it happened was right over, above it, below, right over here on September 19th. Has to put a green bar above the 8. Didn't for a while, right over here. And this is kind of a tough one because the green bar was a close at 2076 versus 2075 open. So that's still green. So officially you'd buy it here. And if you bought it at 2076, it would have dropped $1.16 in your face the next day. Would have sort of started holding up, and then you would have been pretty much up money as it grinded all the way to 22.48. Do I consider that successful personally? Yes. But not exactly the cutest thing in the world. But for ACB, I officially marked it down as a failing trade, just so we're clear. Okay? Beyond Meat, good one. When was the last time the 8 crossed below the 21 in Beyond Meat? It feels so long ago. Oh my God, right over here. August 7th. That would have given you a buy entry right here at 155.13. Oh my God, did that work? Would have been up $17 in a week. Damn right that worked. I'll be right back. Timeout. Just a timeout. Let me know what you guys think of it so far in chat. I'll be back in 2 minutes. All right, thank you so much for waiting. Um, just had to take some natural remedies. So where are we up to? FSLY. Did we do that one already? Yeah, we did. Mark, M-A-R. Marriott. All right, that's a big name. Let's see when the last time the 8 crossed below the 21. Right over here on September 20th. Hmm. Ironically, let's see. Crossed over actually under here. One, two, three, four, five, six, seven. So the seventh bar closed above the exponential 8. You actually don't do it here. You actually pass on it. That was a close one. You have to. If this was the eighth bar, it would have been a legitimate, you know, you could have made 2 points, otherwise fail, but it's seven. So again, we have to follow um, 8 days. I should probably also clarify here. The eighth day can go above the ADMA, but not seven, obviously. Okay, that'll be good to mention. All right, so it happens right over here. So basically, I'm using the closing price of seeing where you enter. It could be lower or higher, depending if you bought it right before the close. Just for argument's sake, it's not a big deal. But on over here, you're holding for 1, 2, 3, 4, 5, 6 days basically before the stock hits 123.40, and you're pretty much up $2.22 at this point, and you're pretty much, you know, you'd be buying. When I zoom out, it looks nice, doesn't it? But remember, you are buying a month or more out. And if you decide to swing this with your risk, clear winner. Clear winner. General Electric, that's a good one. Let's take a look. When was the last time General Electric crossed the 8 underneath the 21? And it seems to be right over here. Right here. 899 on the 8. You could look in the top left. 899 exponential 8, 21903. 1, 2, 3, 4, 5, 6, 7, 8. Bang, right here, 9. Um, was this earnings? Anyway, you buy right here at 880, goes to 907 and 27 cents, and GE does move the options a lot. I obviously have to consider this successful. I mean, I won't even insinuate that you decided to hold for earnings. And again, some people will, some people won't. But just even buying here, pretty much held up in its own. I'm not saying you would have made a home run from it, but if you sold it right before earnings, you were okay. So I would mark that as working. Shopify, I think that's a nice name. Let's see, when did the 8 last cross underneath the 21 art? That happened right over here. 1, 2, 3, 4, 5 got above it. Doesn't count. So we could use over here as the time before that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 right here. Do you consider buying right here in Shopify successful? You'd be buying at 325.57. The next day, it, 2 days later, went to 331.57. You would have been up 6 points. At its worst, which would have been the bottom here, would have gone down to 310.80. Shopify would have dropped short of 15 points against you, $14 and change. And then the stock would have rallied all the way up to $349.44. To me, that's successful in shop. Now, if you, again, agree or disagree with that, keep in mind where I'm coming from. You're not sitting there holding common stock hoping that it goes up while watching, if your number is 1,000, everyone's number is different. If your number is $1,000 and you throw $1,000 worth of call and shop, I mean, what are you going to be down? 40%, 50%, 60% on monthly calls, not weekly, monthly. So You bought on October 3rd, you're going at least to the first week of November, if not further, in time value. Just keep that in mind. And then once you're up over 20 points, once I'm up 10, 15 points after this move, I'm probably out somewhere over here personally, probably near the top of this day right here before it goes up. Maybe not. Again, speculation of what I would have done. I could guess at what I would have done. I do consider that successful. Oracle. And remember, if you're thinking like I want to sell puts or take call spreads, you know, to each their own. Goes under the 8 goes under the 21 here. 1, 2, 3, 4. Nope, doesn't count. Time before that, 8 goes below the 21. This is the 8 is at the 21 here. Goes below right here. Then goes back above. Doesn't count. 8 goes below the 21 right here. Only lasts a few days. Doesn't count. 8 goes below the 21 here. This stock right over here closed at 59 cents. The exponential 8 is at 61 cents, so it doesn't count. And you're pretty much buying right here at 52.97. Before the stock rips to 56.29, you're buying right over here. Damn right Oracle worked for this strategy really well. So that's a good one, Elisa. Where's Apple? We went over Apple. Baba and OTLK. Let's go through Baba. All right. When was the last time Baba's 8 went below the 21? It happened right over here, but only lasted a day, so that doesn't count. Right over here went below 1, 2, 3, 4, 5, 6. So you couldn't buy here because that doesn't count. So you pretty much like I ignore it. Like I don't go back and say, okay, now I need to buy here. So pretty much I say I'm done with Baba, even though I could have argued that this would have worked. Just so we're clear. I don't want to cherry pick the situations. 1, 2, 3, 4, 5, 6, 7, 8. Here's the eighth bar. Went above. As I'm simply saying, the 8-day can go above the 80 MA. So you buy right over here at 164.03, which is the closing price. The next day, the stock drops against you like $4.82, only to happen the very next day where the stock opens up at 170 and you're up huge. There's no way I'm losing money on this trade. I'll tell you that right now. I would have seen my P&L drop the next day. I would have been like, okay. And then I would have just been up massively. The stock opened, I would have sold probably on this day. Knowing me, if you have better holding power than me, it went up another $6.50 and then all the way up to 178.80. So it literally went up $14.77 in a matter of 4 days. Knowing me, I'm probably selling on this day, near the top of this day, knowing me. But if you held, you made a lot more. And if you held longer term, I don't need to tell you buying here, you would have been up a lot, it would have pulled in against you, then you would have been up massively on the recent run. I don't need to get into that. That's, hindsight's 2020. I'm just talking right here. So yeah, for me, I do consider Baba successful. Um, OTLK would never do it on this name, but let's look at it anyway. When was the last time the 8 crossed below the 21? It happened recently, but didn't get above. So that really doesn't count. How about the time before that? Right over here. Got above, doesn't count. How about the time before that? Got below here, got above, but happened too quickly, not 8 days, doesn't count. So when it does that, I actually just reset. So if it does it and then it pulls back again, I just wait for the 8 to go back above the 21 and then back below. That's what I'm doing here on all these names, just so we're clear. 1, 2, 3, 4, 5. Nope. About over here. Goes below. 8 goes below the 21 right here. 1, 2, 3, 4, 5, 6, 7. Nope. 8 never goes above the 21, so I'm not buying here, even though like that's the sexy point where probably had the largest run. So I'm not even doing it there. It's just literally the strategy saying don't buy this thing. Right over here is the last time it happened. Before that. And did we get above the exponential with the green bar? See, this is not really a green bar because it opened and closed at 448. Are you buying here before it had a massive run and it could have worked out well? Maybe, maybe not. Did you buy the next day? Maybe, maybe not. I'm not marking this down as working or failing, but if I were to do it, at that point, I would have made money, knowing me. So, interesting one to look at indeed. Well played, Joe, on CGC. Great call by the Red Dog. Oracle, we went over. Cisco. All right. Cisco. 8 went below the 21 after earnings right here. Held below, held below, held below. Here's the first day that the 8 that the stock went above the 8 and closed above it. You'd be buying at the near the top here, 45.67. Yeah, this worked. Obviously. Buying here. I'll move my mug. Yeah, that worked. Went over Apple. Last one, Bishwamahan on Square. All right, so it dropped below the exponential 8 recently, but we can't tell you if it worked because it never got back above it. So let's look at the time prior. Let's see right there, crossed under. Right over here, crossed under. Didn't last that long. Doesn't count. Right over here, it crossed under. 1, 2, 3, 4, 5, 6, 7, and it closed above right over here. This is an interesting one. Closed above right over here, 64.37. Opened up at 65.32 and went to 66.14. So you were up a little short of $2 on this before it looked back against you and would have failed. That's really hard to say. If you took the money early, you made money. If you decided to hold, you lost. I'll mark it down as a failure just for so many of them being winners. I'll mark that one down as a failure. So ultimately, it might be good for the drip. So ultimately, appreciate that, Ricky. All right, so it is getting late here. Ultimately, this is what I came out with my winning names. And again, I'm going to just type them in chat. We got Apple, Microsoft, Home Depot, Roku, Facebook, Boeing, Raytheon, Stone, CGC, Beyond, MAR, GE, Shopify, Oracle, Baba, Cisco, and those are the ones that were. The questionable ones were FSLY, Disney, which we debated that, Twitter, Boeing, ACB, and Square. So even the ones that were controversial that a lot of you said worked, I literally wrote in as a fail just to try to give the benefit of the doubt towards the losers of the strategy. So that would be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. I'm not counting OTLK, by the way, even if I would have counted that as a win. 16 for my strategy, obviously not from my swing point. 16 wins and 6 losses. That's 16 wins and 6 losses. That's 16 divided by 22, right? 72%. Look at that. You get 72.7%. Look at the effectiveness. Now, some of them that I marked down as losses, a lot of you argued would have been winners, but I think that's about right. Boeing is in there on both. Oh, oops. Boeing should have been a winner in my opinion. So maybe less losses. Either way, you get the picture. Appreciate the heads up though. Your added criterias, and just to say that if you find criteria to add, um, that's great. So let's scroll up to art. Mark, say on Boeing, perhaps one mark. If a stock is in a downtrend and one did not enter long, then only enter on the session. Well, the VWAP reversal strategy is intraday, and the 8 by 8 strategy is swing. So they're two different mentalities. One's using a 5-minute chart, the other the daily. I see what you're saying though, and that could be great. And I would have to back test that. I see what you're saying, Art. That could be great. And Amazon and Tesla, let's just quickly look at that, Art. Last time, I think Amazon's a good one to talk about. Let's see, broke underneath the exponential 8 here. 1, 2, 3, 4, 5, 6. Nope, even though it would have worked. Time before that. 1, 2, 3, 4, 5, 6, 7, 8. You would have bought right over here at 1773.84. 2 days later, it went up over 51 points. Damn right, Amazon worked. And last but not least, Tesla. Just my wife. Just one second. Tesla. When was the last time Tesla was had a crossover of the 8 underneath the 21? Right over here. 1, 2, 3, 4, 5. Nope. 1, 2, 3, 4, 5, 6, 7, 8. Right over here, Art. Look at that. Right over here. You would have bought at 308.77. It would have gone against you $14.77 at the dead worst point the next day. And the next day you would have been up at best $7.50, and then it would have gone as high as 324.24. To me, that's successful in Tesla right there, personally. And if you think you could do better entries than me, because a lot of times these things go against you and then they work, by all means, don't let me stop you. The daily VWAP, I don't really have a strategy for that. Um, well, I pointed that out on the thing. It has to actually, um, if you read step 3 here, and I'll tweet this out. The first day where the stock closes on a green bar above the exponential 8 moving average in colors based on open versus close. So I do highlight that as the third step. So you know what? I'm gonna do more. That's I know everybody suffers from the first 3 feet of the aisle, myself as well. We're all human, right? We're gonna have a Q&A on it tomorrow. How's that? And then we'll get to answer all questions. I'm gonna send it out. I hope you guys enjoyed the new swing strategy. Happy trading, make money, and we'll see you tomorrow morning on the Newsbeat live trading broadcast. Have a wonderful evening. Yes, read instructions beforehand.